Forget about the lottery or even crypto. To build wealth and retire early, you need a plan. A simple, boring, reliable plan. It's called Owning the World through index investing. It's backed by over 100 years of data and is used by many millionaires and even billionaires. Now, using my 24 years of investing experience, I'm going to tell you this step-by-step plan to retire early by owning the world. What it means to own the world. Yes, I've copied the idea for this video from Andrew Craig's excellent book, How to Own the World. But I don't care because it got you on my channel and I'm going to put my own unique spin on it. So if you want investing info from an actual expert, read Andrew Craig's hugely popular book and I'll leave a link below in the description. If you want my 10 pence worth, carry on watching this 10-minute video. When investors like Andrew Craig talk about owning the world, they don't mean buying real estate across the world. They're talking about buying ownership in thousands of businesses, in dozens of countries, across every major industry. And the beauty is, you don't need to buy 1,000 different shares. You can buy one fund called an index fund, and it gives you tiny slices of every major company. Here's what this looks like in practice. The Vanguard FTSE Global All Cap Index Fund holds over 7,000 companies, and that includes Apple, Microsoft, Toyota, Samsung, Nestle, Shell, Unilever, Tesla, Alibaba. You're not betting on a winner, you're investing in everything. If global capitalism grows, you grow. This is called diversification, and it's the best tool to reduce risk. Imagine every time someone buys a phone, gets on a plane, drinks a Coke, uses electricity or shops online, you make money because you own the companies behind those activities. That's what it means when you say, or people like Andrew Craig says, own the world. Why index investing beats everything else? Let's look at why this strategy has quietly created more millionaires than day trading, crypto, or even real estate. Reason number one, it's passive. No need to watch charts, no need to buy and sell daily. You invest, you leave it alone, and you let time do the work. Number two, it's proven by history. Over the last 100 plus years, the global stock market has returned 10% per year on average. This includes world wars, recessions, pandemics, inflation, deflation, and everything in between. Three, it's low cost. Actively managed funds can charge 1 to 2% in fees, but index funds, you're talking 0.22% or less with providers like Vanguard. By the way, Vanguard is my favorite platform because of the low costs, and I find it to be user friendly. It's safer than single stocks. People think investing is risky, but the real risk is not diversifying. Owning one company is risky. Owning 7,000, that's smart in my humble opinion. 5, it works while you sleep. Thanks to compound interest, your money earns money, which earns more money, which earns more money again. It's the closest thing to financial magic you'll ever get. Before we carry on, this video doesn't contain any financial advice. The full disclaimer can be found below in the description. How to actually own the world, step by step. Let's walk through exactly how you can start doing this today, even if you've never invested before. Step 1, pick a platform. This is where you invest. Options in the UK include Vanguard, it's simple and there's low cost as I've said, Hargreaves and Lansdown, which offers a wide range and has more flexibility. Then you've got AJ Bell, Free Trade, Interactive Investor, and many more. Check Money Saving Expert or Borrow Money for comparisons. Again, I'll leave a link below in the description. Step 2, choose a tax wrapper. In UK, you want to invest tax-free. Stocks and shares ISA, you can invest up to £20,000 per year, and you can withdraw anytime tax-free. SIP, which is a self-invested personal pension, you can invest up to £60,000 with tax relief, but you can't access it until 55 or 57. Many investors use both. I started doing 50-50, then switched 90% to my ISA for flexibility. Step 3, choose a fund. Now where the action starts. Pick your index fund. My top picks, Vanguard Life Strategy 100%, UK and global stocks, and auto rebalanced, low cost, Vanguard FTSE Global All Cap Index Fund, which has the widest global reach, Vanguard FTSE All World ETF, simple, clean, globally diversified. Each of these owns thousands of companies. Pick based on your risk tolerance and your own unique financial goals. Step 4, set up monthly investments. Your monthly investment. It's called pound cost averaging. You invest every single month, £100, £250, £500, whatever you can afford. This smooths out the ups and downs of the market. Step 5, set and forget. Seriously, once you've set it up, leave it. Check once or twice a year, that's it. This is barely skimming the surface, to be honest. But I have put together a new playlist on YouTube that gives you a 5-step plan to build wealth and retire early. See below and I'll leave all 5 videos. All I would say is to watch in the correct order and take notes. And the video you're watching now is video 5 in that playlist. Chapter 4, what stops most people? This all sounds simple, so why doesn't everyone do it? Because it's boring. It doesn't give you a quick dopamine hit. It doesn't feel clever. And it doesn't promise overnight success. But guess what? 90% of actively managed funds fail to beat the market. Most traders underperform and fail because they try to time the market. And most people panic sell when markets drop. The winners, they stick to boring index funds. They invest through market crashes. They stay calm. They stay consistent and they get rich. The average investor underperforms the market because they can't sit still. But the best investors, they make a plan and ignore the noise. A military saying I was taught in the Royal Air Force was that prior planning prevents piss poor performance. Zero to millionaire. Realistic examples. Let's run some real world numbers. Assuming 10% annual returns, long-term market average, and based on over 100 years of historical data, as I said at the start. Assuming monthly investments, so investing every single month, and finally, no withdrawals. £500 a month for 30 years equals £1.1 million. £1,000 a month for 26 years equals £1 million. £1,500 a month over 22 years, again $1 million. And most of that is interest earned. That's the magic of compound growth. Even if you can only do £100 a month, it's a start. You can always increase later. But the earlier you start, the faster your wealth snowballs. It builds. Chapter 6, 5 mistakes to avoid. Let's make sure you don't trip up. 1. Chasing hot stocks. Like me in 2011 when I lost our life savings. By investing in stocks and doing literally no research. FOMO is a real thing that sucks most people in and it's a trap. Index investing means no guessing. 2. Ignoring fees. That 0.3% platform difference could cost you thousands over the years. Always compare fees. Again, see below for the Money Expert link where you can compare the fees easily. 3. Selling in a crash. Markets drop. That's normal. Don't sell at the bottom. Hold or even buy more. 4. Waiting for the perfect time. There isn't one. Just start. You can tweak later. 5. Overcomplicating it. One platform, one fund, one monthly direct debit. Done. Remember my new playlist I mentioned earlier? Well, 1 to 5, one of the 5 videos below covers 5 of my biggest mistakes over the last 24 years as an investor. Summary. You don't need to be rich. You don't need to be lucky. You just need to start. The best investors in history follow a plan. And you can as well. Open an account. Pick a global index fund. Invest monthly. Retire early by owning the world. Now obviously this is not guaranteed. Nothing in investing is guaranteed. But from my experience, you put the work in, you put a plan in place, you invest consistently, long term, you retire early. It's really that simple. If you are serious about investing and retiring early, watch all 5 videos in my new playlist. And if any of this resonates and you want to learn more, type yes below and I'll let you join my investor community for free to help you out even more with my experience.